All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for keeping us on, tuning us in. We love having you there, and also we want to make sure that we're getting you this information in a timely fashion so you can make marketing decisions with your business too. Let's take a look at these markets because these markets are your money, and we'll start with corn. Corn was a little bit of green on the screen earlier, and we're still there. This is about where we've been all day. Maize only up 3 ticks or 3/4 cent to 438.5. We've expanded we haven't really, I guess. The range is 3.5 cents, 3 3/4 cents, I guess, and we're a penny off the high of a 3 3/4 cent range. You go out to the Novi new crop. We're all waiting for this to get up to $5, aren't we? 2 1/4 cents higher to 475, which is just a tick off the high of the day, and we've had almost a 5-cent range, a 4.5-cent range over there. So that's the corn. Up between 1 1/4 and 2 1/4 cents across the board. Moving over to the beans, they've had a little bit of a less of a good day. This is about a 10-cent loss here, double-digit loss in the May. 10.5 cents lower there to 11.55.5, 2 cents off the low of the day, and we've had a 12-cent range. Go out to the Novi new crop, that's down 7 1/4 cents to 11.67 1/4, and that's about 2 3/4 cents off the low of the day there, and we've had about a 10-cent range there, 9.5 cent range. So that gives you an idea about where we sit. That's soybeans. Let's go to the wheat. That's the wheat in Chicago. This is up between 1.5 and 3 cents on the day. 2 3/4 cents better in the May to 5.97 1/4. Trying to get back above that 6 handle. We had been high as 6.05, right? So we're only just about 4 cents off the low of the day there, and we've got about 8 cents to go to the high. If we go out to the Dees wheat in Chicago, that's up 3 cents to 6.57, and that's about 4.5 cents off the low there, and about 5.5 cents from the high. There, that little give you an idea about where we sit in that range. Let's move over to the hard red in Kansas City. 3 1/4 cents better there in that May contract. 627.5 is last, 3 cents off of the high there, and I'm going to call it 6.5 cents from the low. The Dees has a 3 1/4 cent bid to it. 664 is last there, and that's 3.5 cents from the high too. So hard red wheat, about 3 cents better across the board. Let's go to the spring wheat from Kansas City. We go to Minneapolis. 3.5 cents better there in that Minneapolis spring wheat. That's May. 682.5 is last. 4 1/4 cents off the high of the day. 6.5 cents from the low. Dees, 2 1/4 cents better there to 709. 4.5 cents off the high. 3 cents from the low. So we're kind of right in the middle of the ranges right now when it comes to the wheat. Cotton, of course, that's going to be a little bit better by 51 points in the July contract to 81.52, and we got a 21-point bid to the Dees, 77.90, which is 45 points off the low of the day. All right, let's bring in our guest analyst, who's been so patiently waiting in the wings, and that's going to be Mr. Ted Seifried, Zaner Ag Hedge in Chicago. Ted, thanks for being on. All right, what do you find interesting about those prices that I just read off?
Yeah, really not much there, Scott. Look, beans had a turnaround day lower after being very schizophrenic all day. They were, up and then down and then up and down, just very nervous markets. And listen, for soybeans, planting delays are a very double-edged sword, right? On one hand, if planting delays go on long enough, that is, it's a threat to acres as a whole. But if planting delays are temporary and that pushes corn planting back and we get a little bit worried about getting corn in time, we might end up adding more soybean acres. So in front of a big system here this weekend and, question marks of, how quickly we'll be able to get back in the fields and things like that. Soybeans just really don't know what to do. But the reversal lower yesterday, we're obviously seeing some follow through with that today. We're backing off of that key resistance level, that 50-day moving average. So kind of predictable, I guess, from a technical standpoint. And then you look at grains, corn and wheat. Wheat's still concerned about some dryness in Russia and Ukraine and also the situation there and inflation and everything like that. And corn, sort of understandably is a little nervous about all the rains. So, yeah, we're trading weather, we're trading inflation, we're trading global conflict, we're trading a lot of different things, but we don't have any real clear, singular thing that's giving us direction, Scott. And I think that's just making for some nervous markets. We've had a nice little bounce off the lows. It's been a short covering rally based on a number of different things that we just talked about. But I'm not sure any of those things by themselves really mean we have to go sharply higher from here. So we'll have to see how we end the week and where we go from there.
Yeah, I mean, you've got some data, but a lot of the data that you're talking about does probably demand more time, right? You just can't make a decision this early. I mean, who knows what's going to happen in the Middle East? You're right. Who knows what's going to happen with the weather? I mean, so a lot of these things have got you in what some of us would call purgatory, I think. So it's probably the best word for the trade of the day. I think that's how I feel, at least. You're exactly right. Your sentiments I would agree with.
Yeah, and it's really early to get too terribly concerned with planting delays, right? And a lot of this moisture that's happening, 10 days ago, we were talking about, or not even 10 days, 4 days ago, we were talking about how dry the areas that are about to get a ton of rain are. So now we're worried about how wet they're going to be. This is the time of year where we always find something to get a little bit concerned about because the crop's not on the ground yet, and we still have growing season to get through. So this is the time to add some weather premium. But ultimately, Scott, the water going into the ground, the water that does go into the ground, is going to be a very beneficial thing longer term. It's just, can we get the crop planted?
Yep. All right, I agree. Stay right there, though. We got to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge. She'll be right back after this. All right, welcome back. Let's talk about some livestock, right? There's been stories going over there today, but it's a little bit different. Let's take a look at live cattle. We're real close to what I would call the equatorial line, right? That's unchanged. Not really doing too much here. Let's go to the June. June just went sharply unchanged on me, right? What I'm talking about, 175.25 is last there, and that's right in the middle of that range. If you go out to the East, that's down 27 cents. That's the biggest mover, down 27 cents to 182.27. So without getting a little bit too myopic and fussing over this too much, folks, there's not a lot going on in live cattle. Let's move along, all right? It's okay to say that sometimes. Feeder cattle are the same. I want to stay away from April because that's going off the board, but May is up one tick, 2 cents to 244.12. And as you go out the deferreds, the biggest mover there is a 37 cent loss to August to 255.92. So again, those two markets, not a lot going on. So maybe our guest analyst has got something to say about it. And here was ADM said that they thought this was a little bit of a surprise. This market's been strong, the lean hog market, but it's backing up here today doing some infill work. May's down $1.22 to 96.12, and let's go to June right behind it. That's the biggest loser, $1.70 lower there to 105.75. That's still $1 off the low of the day. All right, let's bring in Ted Seifried, Zaner Ag Hedge. You got 60 seconds, Ted. Have at it.
Well, Scott, you said there's stories. I don't have any, so if you do, please share. I mean, we've got bird flu talk, but I've had enough of that. But, well, okay, so, as far as cattle are concerned, it's a very quiet day. We had the break, we've had the bounce, and now we're just kind of trying to figure all of that out and see where we go from here. We're watching very closely what's happening in the overall economy, in particular the stock market. We are a little concerned about demand, but go back to last cattle on feed report, and that placements number was really low. So we've got kind of conflicting things going on, conflicting thoughts in our head from a supply versus demand standpoint, and that's all boiling down to, hey, let's just kind of pause here and see how this plays out. That's kind of how it feels to me. As far as hogs are concerned, pretty decent pullback today after another shot at those highs. We have bounced off the lows, as you mentioned. But export sales, marketing year low. And not that export sales are that big of a deal. I mean, they're a bigger deal for pork than they are for beef. But still, marketing year low, that kind of leaves a little bit of a bad taste in your mouth. And I think you put a little bit of a wet blanket on the rally, especially since we couldn't close up near the highs yesterday. So yeah, like you said, back and fill in the hogs. Let's see where we close today and go from there.
That was just enough to keep the buyers from coming to the table. That's what it all looks like to me. So no buyers, and the sellers kind of take over, even if there's only about 4 of them. Who knows? But appreciate you coming on. Thank you very much. Ted Seifried, Zaner Ag Hedge, coming to us from Chicago. I'll bring it back to Music Row here in Nashville.